Hi, everybody. Welcome to the channel. Today, we're going to talk about the best real estate strategies for 2025. The real estate market is a great way to diversify your investment portfolio. Real estate and the stock market often move in different directions. Plus, house prices don't change as much as stock prices. Now, just as there are many kinds of real estate assets like commercial real estate, single family, there's rental properties. You can go buy apartment buildings and then you can do real estate wholesaling. There's real estate debt and others. There are also various kinds of real estate investing. Now, here's a look at the variety of real estate investment strategies that are out there today. So, number one, my favorite, house hacking. House hacking is a very smart way to buy a home. Instead of just living in that house, you're going to rent out part of it, like a room or maybe a basement apartment. You can also buy a duplex or fourplex and live in one unit while renting out the other units. This rental income can help you pay your mortgage, sometimes even covering it completely so you don't really pay anything. I love this way because this is what I first did when I started investing. I bought a house and then had two friends live there and pay for the mortgage. So one of the great things is you can lower your costs, right? You can get a regular home loan, which is usually has lower interest rates, and then it also has a smaller down payment than if you went and bought a rental property and you weren't living in it. Next thing is it provides extra income. So the rent you collect can help you pay off your mortgage faster or use it for other things like go on a vacation or saving, for future investments. By house hacking, you can start building wealth through real estate without a huge upfront investment like you were if you were going to go out and just get a rental property. Now, like I said, I did that house hacking, and my first property, when I went and sold it, I made $60,000 profit. Okay, next, two, you want to invest in single family rental properties. So buying a home and renting it out is, a really popular way to build wealth through real estate. Most of my investments are single family homes as of today. Why invest in single family rentals? Steady income. Rent from tenants provides a regular income stream. Okay, appreciation. Over time, the value of your property can increase. You make more money. Then you've got tax benefits. There are various tax advantages, including like deductions for your mortgage, your interest, property taxes, and then you've got depreciation. You also have inflation hedge. As inflation rises, rental income can increase, helping to protect your investment. And then you have diversification, right? Adding single family rentals to your investment portfolio can really help you spread out your risk. Now, the next strategy up is flipping properties. Flipping is when someone buys a property, then you're going to fix it up, and then you're going to sell it quickly for a profit. Think of it like buying low, fixing up, and then selling high. Well, how does flipping properties work? Well, hopefully you've seen like all those different shows out there like flipping houses and all that stuff. If not, you can go check them out. But one, you need to find a deal, right? Flippers look for houses that are undervalued or need a lot of repairs. Two, then you just go in, you renovate them, and they invest that money to improve that property. And they focus on key areas like kitchen and bathrooms or whatever really needs repaired to sell that house at a premium. Then next, three, you're going to just sell it quickly. The goal is to sell that renovated property as soon as possible so you can maximize your profits. Because the longer you keep that property, the more money you're going to be spending on it. Now, why would house flipping be risky? Well, timing. If the property doesn't really sell quickly, the flipper continues to pay the mortgage, the property taxes, and all the other expenses that go with it. You've got the cost, right? Renovation costs can sometimes exceed what you were planning, and that will eat into your potential profit. It maybe even wipe all your profit out, so all that work for nothing. And then you've got market conditions, right? A downturn in the housing market can really impact selling prices. So the key to successful flipping is you really need to find really, really good deals and identify those properties and jump on them quickly. And then you need to renovate smart. making improvements that really add value and not just doing whatever you feel like doing and spending a ton of money on a house to make it look your way and not being able to sell it. And then you got to be efficient timing, right? Selling quickly. You've got to get rid of that house because holding costs are going to kill you. All right, number 4 on our strategy list is you're going to live in and flip the house. So a live in flip is a strategy where you buy that fixer upper, same thing as house flipping, live in it though while you renovate, and then you sell it for a profit. So you're living in that investment. So why this might be attractive is tax benefits, right? You can potentially avoid paying capital gains taxes on the profit if you live in that house at least 2 of the past 5 years. So let's say you take forever to renovate it because you're living in it, so it could take a while. If you live in it 2 years, you don't have that capital gains. Another thing, lower costs. You can get lower interest rates on your mortgage compared to an investment property because you're going to be living in it. Okay, next up, we're going to talk about the 5th strategy, property tax lien investing. So imagine you're, a homeowner who forgets to pay their property taxes. So when this happens, the government can place a tax lien on your property. Now, this lien gives the government the right to take ownership of the property if the taxes aren't paid. Now, that's where you come in. Now, you can buy these tax liens at public auction. And by buying a tax lien, you're essentially lending money to that homeowner with the promise of a high interest rate return on your money. Now, when you do this investment strategy, there's 2 possible outcomes, right? One, the homeowner pays the taxes and you get your money back plus that interest. And usually the interest is really good. 2, the homeowner doesn't pay after a certain period, then you can foreclose on the property and take ownership for way less than buying the house. So why would you want to invest in tax liens? Well, you get a high return, right? Tax liens often offer high interest rates. And then security, right? Real estate is a tangible asset and tax liens are secured investment. And then you have the diversification aspect of it. It's just going to be a different way to invest in real estate. Okay, the 6th strategy is called BRRRR, buy, rehab, rent, refinance, repeat. Okay? It's a popular strategy for building wealth through real estate, and this is how it works. 1, you buy, purchase a property, hopefully at a discount. 2, then you're going to rehab it and fix up the property to increase its value. 3, then you'll rent that property to tenants to generate income. Then you're going to, hopefully you have enough equity in that property since you bought it cheap and then you rehabbed it. But you refinance it to get a new mortgage on that property, pulling out some of that equity. And then 5, you repeat. Use that cash from that refinance, go buy another property, and then start the process all over again. Now, why is this effective? And I did this strategy many times when I did, doing my real estate investing. Leverage, using other people's money, the bank's money to buy those properties, or you can use private funds. You've got also cash flow. Rental income covers the mortgage and provides extra cash if you do it right. Then you got appreciation. The property's value increases over time. And then next, you've got tax benefits. That real estate offers you a lot of tax advantages. The next strategy, number 7, is rental debt snowballing. I don't know if you've ever heard of this one, but so this method is to pay off your rental property mortgages faster. It's similar to the debt snowball method used to pay off personal debt. So here's how it's going to work. 1, list your mortgages out. So write down all your rental property and then the mortgages you have from the smallest mortgage to the largest balance. Then what you want to do is you're going to make a minimum payments. So pay the minimum payment on all your mortgages. Then what you're going to do for number 3 is you're going to attack the smallest mortgage. Any extra money you get from the mortgages or from your personal job or whatever you're doing to pay off that smallest mortgage. And then 4, you're just going to repeat that process. Once you pay that mortgage off, you go to the next smallest one and pay that off. And you just keep going down the row until you've got all your mortgages pay off. Now, why this works? It's really a huge psychological boost, right? Paying off a mortgage early gives you really a sense of accomplishment, motivates you to keep going and pay off those other properties. You also have accelerated payoff, right? By focusing on that smallest one and that smallest mortgage or debt, you can pay that off and then just boom, start paying off all the other mortgages quickly. Then as you pay them off, you're going to increase your cash flow. And boom, more and more rental income comes in. You pay off your other properties quicker and quicker. And it is really helpful for you and beneficial for you to pay those off as quickly as possible to get all that extra cash flow. I hope you found these strategies for 2025 helpful. Nothing will happen unless you take action. You should get started by doing house hacking and then expand from there to, do the other strategies. So I hope you found this video helpful. Give it a thumbs up and hit subscribe for more videos on wealth building, real estate investing, and in making money. And just let us know your thoughts in the comment section.